not a test. This is your emergency broadcast system announcing the commencement of the annual purge sanctioned by the U.S. government. Weapons of Class 4 and lower have been authorized for use during the purge. All other weapons are restricted. Government officials of ranking 10 have been granted immunity from the purge and shall not be harmed. Commencing at the siren, any and all crime, including murder, will be legal for 12 continuous hours. Police, fire, and emergency medical services will be unavailable until tomorrow morning at 7 a.m. when the purge concludes. Blessed be our new founding fathers and America, a nation reborn. May God be with you all. This is not a test. This is your emergency broadcast system announcing the commencement of the annual purge sanctioned by the U.S. government. Weapons of Class 4 and lower have been authorized for use during the purge. All other weapons are restricted. Government officials of ranking 10 have been granted immunity from the purge and shall not be harmed. Commencing at the siren, any and all crime, including murder, will be legal for 12 continuous hours. Police, fire, and emergency medical services will be unavailable until tomorrow morning at 7 a.m. when the purge concludes. Blessed be our new founding fathers and America, a nation reborn. May God be with you all.
Yes. The purge. Got a stock purge going on right now. Let YouTube come in. Let me know you can hear me on YouTube. Hope everybody's doing well. The stock we're looking at here is WBD. WBD. Not to be confused with the WWF. Not to be confused with BBY. For all the pervs out there. Or is that BBBY? No, BBBW. That's funny. This is WBD. House of Dragons. Right here. Produce content for House of Dragons. Let me turn the volume up on YouTube. He says he can't hear me. Let me know if it turned it up, mister. So, WBD is a spinoff from AT&T. Let me know if somebody else said loud and clear. And if we look at evaluation, an abomination of Warner Brothers Discovery Class A shares. Oh, come on, man. You're not going to sign me in. Sign me in, man. Come on, man. I'm not even signed in. Are you kidding me? Hold on just a second. In case you guys are hackers, I got to move this shit over. It's kind of an abomination. I mean, evaluation, not abomination. Could be an abomination. So the abomination on Warner Brothers stock is $40 fair value. Now, if we're in a recession, all these stocks get repriced. I don't know why that confuses people, but it does. Listening to a lady yesterday, she said, "You think Roku will ever recover? Why is it down so far, Gerald?" Because they're raising interest rates. Pay attention. What have you been living under a rock? All right, it's time to grow up. It's time to stop coming at the stock market like little kids. You need to know why this shit is happening. Stop making excuses for yourself. Oh, I'm so busy. Stop. You need to learn and read because you're going to go through these cycles again and again and again and again and again and again. You're going to go through this through your life, man. So if you're 23 right now, you're getting to live through it, man. And the response isn't to be scared or fearful. It's to embrace it and understand it. and learn about the different sectors and cycles and how you think this is the only time they're going to play with interest rates in your life? You better get used to it, man. It's like the third time I've been through this shit. And better understand what's going to happen, man. I was talking with a guy yesterday. I do a lot of these one-on-ones. Concerned about the economy. I'm like, you ain't got enough money to worry about it, bro. Oh, your whole 13 grand? Your problem ain't the market going down. Your problem is you ain't got no money when the market goes down. So let's get our priorities straight, man. It ain't like you're sitting on 20 million. You're sitting on 20 million. Yeah, there's some things we could do. But you're sitting on 13. You're trying to get fancy. What we need to figure out is why do you only got 13 grand? Not that the market might go down. He's worried about the wrong thing, man. Worried about the wrong thing. You got to get worried about the right things, man. You got to get worried about the right things. And it's what do you do every day? So I'm going to ask you, what'd you do on Friday? If the answer is nothing, then you're probably going to do a whole bunch more nutting on Monday. And then add up 5 days of nutting. You see what I'm saying? So our worry is not that the market's going down. That's good. I know it's hard to get your brain around, but it really is. Over time, you'll be happy it went down. I'm not saying it's fun to ride it. I'm not saying any of that. None of that's fun. This is not fun. It's not fun. I own fucking Intel at 55. It's now 31. That ain't fun. Right? But there's legitimate problems here. So we could go read about it. And then we say, okay, is this company big enough? Because one thing you can understand, or one thing you should understand, blue collar companies, companies with billions of dollars, hire very smart people, smarter than me, smarter than you. And they just tend to survive. If you go read chapter 10 of my free ebook, it will change your life and it'll improve your knowledge of the stock market. It's such a simple idea. It's called Dogs of the Dow. And I watch people spend so much time on complete nonsense and not understand this powerful wealth building strategy that the richest families in the world are involved in. Okay? You can sit around playing with yourself, talking about options and this and that and this and that. And if you don't understand these 10 stocks and how they work and how they equate to the economy and the sectors they're in and the dividends and the concept behind these 10 stocks inside the Dogs of the Dow, you are completely wasting your time. It's one of the most powerful lessons on business, on money, on cash flow, on appreciation is understanding those 10 stocks. It always makes me a little bit sad. I want to cry a little bit. Sometimes I do cry. I lay in bed and I cry for you guys. Little tears come out. Little tears. I'm so sad. This is one of those stock makes me sad, man. I cry a little bit, especially for the people on Instagram. I just cry a little bit. Because I know they don't get it, man. They'll read my book and then they go, what stock you think I should buy? I gave you a whole chapter, man. Chapter 10, you ain't even had a kid last night said, Gerald, I read your book in 24 hours. I was like, you don't know shit. You read a book in 24 hours. You don't know anything. It's not about reading a book. It's about applying the book, man. What good does it do to read book after book after book after book after book? It's completely stupid. Completely stupid if you don't implement it. The idea that you've read 4 real estate books and don't own real estate is stupid. It's completely ridiculous. But people spend their time on that. Entrepreneurial is entertainment. Right now, Intel, most of you guys are wasting your time. If you read 2 books, you read 1 too many. You read 1 too many. You're not doing anything from the first book. Kid said, I read your book in 24 hours. You don't know anything. You didn't learn anything from that. 24 hours. What'd you learn? You just read words that I wrote down. Now go implement it. He's not going to implement it. He's going to go off to the next book and read that one. So this is Intel right here. But let's get back to WBD. They said the abomination is a $40 value. Stock's trading at $13. Got a 5-star. Warner Brothers Discover reports a weak start to the new future. So we got HBO Max. You ever heard of HBO? I know some of you guys only watch TikTok. But if you were to take your brain, most of you watch TikTok. That's where you get most of your news, TikTok. I think I'll discover how to invest on TikTok. That'll do it for me. All I need to know is on TikTok, Gerald. 12-year-olds can explain everything I need to know. What's the name of the book, Gerald? It's my book, Rob. You only need to read mine. Why would you read other books? Mine in the Bible. Maybe mine first, then read the Bible. So right here, HBO Max, Discover. These are content creators. Content ain't going anywhere. We need content. Okay? So the evaluation is $40 and we're trading at $13. So today I backed up the truck a little bit and I bought me a big juicy chunk. I basically doubled my position. You know why? Because my renters paid me money and I took their money and I bought HBO. That went right over people's heads. I didn't use my money. I'm not buying this shitty stock with my money. That stock's going down, man. So I'm going to buy stage ones. I'm going to use their money. Not my money. Now it is my money, but you get the mindset behind that. It's like, no, I want to use other people's money. It's actually the asset money. It's the money from the assets. So I put my money into assets. Assets pay me money. I take that money and I buy more assets. Pretty simple concept, right? But it's life-changing. I call it the push. So I took a chunk of my rent money, about 20%. I put it into this WBD. Is this the bottom? I don't know. Don't really care. I'm just going to buy the stage ones, okay? So, but it is undervalued. I do know that. It's trading way below trend. But right now we're going into possible recession. Everybody's freaking out. Stocks are coming down. Okay, whatever. When you do a dividend capture, do you have to sell after the dividend? No, you don't have to. I tried to teach on this dividend capture thing. I hope you got it. If you'll listen to my content and stop hanging out with your loser friends for 5 minutes. Stop hanging out with all the people you hang out with that aren't helping you at all. And I put a company out there, and we'll get to it today, Zim, and it's gone down since we did that. And that's all right. That's all right. We don't care. Or I don't care. We'll let it come in. But the dividend capture was to teach a principle of how dividends work. There's 3 days on a dividend. A company does the announcement day. Now, you know what that is, right? That's like all the TikTok videos you watch where the kid goes, oh, look at my new video. That's the announcement. The ex-dividend day is the day the dividend is recorded. And then when that opens the next day, after the day of record, the value of the dividend comes out of the stock. This is a super important financial principle that you have to understand. I've got people been following me a year, still confused by this. Shame on you. And you have children. They let you have kids, and you don't understand this. Give the kids back. Send them back. If a dividend is money coming out of the checking account of the company. So when they hand it to you, it just came out of the company. So the valuation of the company just changed by the money that came out. So if the company was worth $20 billion and they paid a $1 billion dividend, meaning the money left the company, stay with me, kids, it's not complicated finance. The company was worth $20 billion. Now we just gave out $1 billion. How much are we worth? $19 billion. $19 billion. Now all of your kids, none of them understand what I just said. You got 16-year-olds, don't understand dividend, but they all learn TikTok. They know TikTok. They don't know what I just said. Most of adults in America do not understand what I just said. Ask your friends, and the ones that say they don't, ask yourself, why do I hang out with this dude? Ask yourself these things. Birds of a feather flock together. You are who you hang out with. So the fact that you're a grown human and don't understand, you got to know this stuff, man. You got to know this stuff. So when a dividend is paid, the value comes out. So that day it opens down. So if the dividend was, say, in the case of Zim, it was $4.75 on ex-dividend day, the stock opens down $4.75. The value came out of the stock. And then the chart readjusts. The prices readjust. The value came out of it. The value came out of it. The value just came out. I meet a lot of ladies. Oh, I'm just as smart as all. Really? Are you? Can you explain dividends to me? And then you get the duh. No. Okay then. You're not that smart. So dividends are one of the core It accounts for 40% of the S&P 500's total return, not options, not day trading, none of that shit. It's dividends, okay? It's what retires people. That's why rich stay rich, is they own things that just keeps giving them money, man. They don't stay rich because they trade options. Nobody's rich because of that. Nobody stays rich because of that. Now they use them. It's a tool. But that's not why they're rich. They're rich because they own assets that make money when they're doing nothing. That's why they're rich. You know, flipping houses will make you money, but that's not why you're rich. It's what you do with the money when you flip the house. It's what makes you rich. Anybody make money? It's not hard to make money. I know a lot of people make money. They're broke. They make a lot of money. They spend it. Make a lot of money. Spend it. They're not wealthy. So making money is just half the battle. It's what do you do with the money you make, man? So this is WBD. The abomination is it's only trading at $12.90. It's a $40 stock. In a perfect world, we're not in a perfect world right now, so it's hard for it to hit that price. Another stock I broke my own rules. I called an Audible. If you're in the Money Flow gang, texted out today and said I'm just buying here, even though it's technically not the bottom yet. May not be the bottom, but I think it'll be the bottom in the future for sure. 28 on the RSI. So I started spreading money around a lot of these dividend stocks that I own that are hitting it a little early. I realize that. MACD hasn't even rolled over yet. Hasn't rolled over yet. So it's a little early, but I'm calling an Audible. I think this will probably be the bottom for some of these. Maybe not. Maybe we keep going lower. Maybe not. Maybe not. Maybe not. We'll see. Now, I only did that on the ones that pay dividends. Pay attention. Pay attention. So I want solid stage ones on non-dividend payers. And if it's a dividend payer, I can be a little loosier-goosier if you have a big position. Now, I'm not trading this, so I wouldn't do this trading because it's not a great setup. You know, but I think it's probably the bottom. I think it's probably the bottom. It don't matter what stock I'm talking about, man. It's what I'm trying to say, man. It's what I'm trying to say. So a lot of these dividend stocks are trading below the 200. They're hitting extreme RSIs. Doesn't mean it's the bottom, but that's where I'm looking to be a buyer on all of them. I have no intentions of selling Intel. I plan to build up my position over time. Another one, nice dividend payer, hitting extreme levels right now. Verizon could go lower. Could go lower. But it's trading pretty low right now. They do have some problems. Let's look at the abomination of Verizon. Valuation. Let's look at the evaluation. 5-star. Verizon faces declining wireless share as rivals reach service parity. Means they're catching up. Now, a lot of times about stocks, something that you'll see is they exaggerate things in the headlines. Massive weakness in real estate. Oh my God, it's like a housing crisis. And then you go look and you read the number. And you know what the crisis is? It's only up 18% this year. Housing prices are only up 18%. It's slowing. Well, that's a long ways from negative, right? Real estate's only up 18% this year. But guess what? The market doesn't trade based on that. The market trades based on what it thinks will happen in the future. Fear and greed. Not based on logic. Okay? Never based on logic. Market never trades based on logic. So if you're a very logical person, you're going to find the market very difficult because it doesn't trade based on logic. It's fear and greed. And once the fear starts, it keeps going. And that's what this little gauge here, the RSI, Relative Strength Index. Okay? Relative Strength Index. Now, you have friends that you hang out with, they never even heard that term. Relative Strength Index. That's why they're broke. Now, if you ask them about, so today go, hey man, do you know who Kim Kardashian is? They'll be like, oh yeah. What about Khloe? You know Khloe Kardashian? Oh yeah. What about Relative Strength Index? You know what that is? No. All right, we can see the caliber of your friends. So you want a lot of friends to know what this is. Because then you have a lot of people that are on the same page as you. And guess what? You're going to be like them. So if you want to own a lot of property, you should hang out with people that own property. Duh. It's not a complicated concept. So, yeah, ask them, hey, man, we won't keep going, man. I'm just going to embarrass you. Let's see. Limit your time with people that don't know these things, man. Otherwise, you're going to be like them. That's the God's truth. Call it what you want to call it. That is the God's honest truth. You're going to be like the people you hang out with or spend time on or think about or look at. You're going to be that stuff. You're going to be what you think about. What you think about comes about. What you focus on grows. Okay? We know this. It's been that way since you're a kid. If your kid hangs out with pot-smoking losers, good chance your kid's going to be a pot-smoking loser. It's just the way it works. If you hang out with loser friends, you're going to be a loser. It's just the way it works. If you hang out with people doing big things, trying to do big things, entrepreneurs, business owners, people that are philanthropists and give to charities, and guess what? You're going to be just like that. If you hang out with people chilling on the weekend, taking breaks all the time, you're going to be just like that. You're going to be the people you hang out with, man. That's the God's honest truth. That's the God's honest truth. So that's why the entrepreneur's journey is a little bit lonely, by the way. I'm not talking about the shit you have to do, like you got to hang out with your sister on her birthday. I get that. I'm not talking about that. Okay. So RSI is 28 on Intel. I called an Audible, bought a little Intel, bought a little Verizon. Another stock that it's not a stock, it's a closed-end fund. This was one we were supposed to research. Closed-end funds. You know what a closed-end fund is? Closed-end fund. They don't issue shares. In a mutual fund, they issue shares. A lot of people start buying the fund, they issue more shares, they buy more shit. Closed-end fund doesn't work that way. Closed-end fund will issue usually about $100 million worth of shares. They go public. They take that $100 million, they start buying assets, and then they leverage it by borrowing against the books that they have, what's on their books, their portfolio. They take the borrowed money and they go leverage it up, and that's how they get a 10, 20, not 20. It's how they get 10, 12% dividend yields. Okay, these are professional money managers. You can ride with them. This is one of the companies called the COF Global Dividend and Income Fund. They are allowed to invest all over the world. Very little restrictions on what these guys can invest in. And they try to up the dividend yield. So I like to own a little bit of this. I like to buy it when it's cheap, not when it's expensive. So been added to this a little bit today. Not a lot, but added some today. Again, not extreme, not on sale. Calling an Audible. I don't think we're going that much lower. That's a personal opinion. Let's look at Zim. Zim's gotten smashed. This has got a huge dividend yield. I had a couple people talk shit about it. I had one guy tell me my horrible pick. And I was like, bro, I'm going to try. I can't even really say what I said to him on here because they'll block me. I guess it was horrible because it went down. I don't know what he's talking about. But this is just a money flow pattern, right? If you look at it, that's what it's doing right here. It's just flowing. This is normal movement of price, sideways up, sideways down, right? Isn't that what we do? Isn't that the money flow? Right? So that's how it moves. And one of the risks on this stock is it's a global shipper. It does shipping. Now they've had record massive profits. If you were to go read the Q, let's pull this up. I want to read this. Now I sent an email and I asked everybody to read it. I don't know if you read it or not. Let's see. Maybe I should have put it on TikTok as a 30-second video so it could be read that way. Let's see. Let's pull it up. Maybe if I made it into a 15-second reel, it'd make more sense for everyone. Let's see. Zim. Let's go. Let's pull this up. Now, if you go to the company website, this was your homework. darn it. New on Zim.com. Mandatory country-specific BL requirements and booking restrictions. So if you wanted to ship stuff from China to here, you could book it right here. So these guys ship all over the world. You can see their schedules and their routes. You can see schedule by vessel. It's pretty interesting, actually. Oh, that's not the map. Where's the map at, man? Let's go to investor section. Look at these boats. So they run a fleet of what they call fast boats. Zim Integrated Shipping Services is an Israeli base. They're Israeli, man. You know what they say about the Israelis. It operates a fleet and a network of shipping lines offering cargo transportation services on all major global trade routes. It also offers multiple model cargo handling, tariff management, schedule information, and other related services support by the company's local offices and representatives around the world. And so they ship things, man. Well, if you come over here, and it says it was formed in 1940. I was talking to Chris Johnson about this the other day. And if we come over here under financials, and right here you click Q2. Now it's not a reel, it's not a TikTok video, okay? But if you come over here and click it, you're going to see a lot of big words, okay? Zim reports financial results for the second quarter. 2020, okay. Recorded net income, $1.3 billion. That's a lot of money. 1.23 billion. Oh, increased quarterly dividend payout to 30% of net income. So their plan is to pay out, much like a REIT. So this stock here, its plan is to pay out 30% of its income to shareholders. Well, at the current rate, at 35%, that puts the dividend yield at 70-something%. Let me look. What is it exactly? Hold on. 75% right now. Now, ordinarily, that would be complete nonsense. And I don't chase dividend yield because looking at the yield doesn't tell you anything because we don't know if it's sustainable. Now, at first glance, you're thinking, okay, that's not sustainable. Probably not. They just told you it's not. And you say, what do you mean? Well, if you read the earnings, it says that the payout will be 30% of net income. Dividend of approximately $571 million, which came out to, based on the number of shares, again, big math here. So they had $571 million. That was 30% of their net income, meaning after they paid all their bills, paid their debt. They ain't got much debt, by the way. It's like very little debt. So look, their net income for the second quarter was $1.3 billion. Big number, huh? Well, what's 30% of $1.3 billion? Oh my God. I think it's $571 million. They paid the dividend out of money they made. Now, I don't know about you, but that's pretty crazy. 75% dividend yield that came out of money they made. Usually when you see a dividend yield that high, it means the company's going bust. This one's booming. Meaning this dividend, they made $1.3 billion in net income for the second quarter. Second quarter, guys. And what they paid out on that was $4.75 a share. So that'll be paid on 9/8. Now, a lot of questions came in about this. It made me cry. I laid in bed and I cried a little bit. And I thought, man, these guys hanging out with their friends. And they spent no time understanding this. So on ex-dividend day, the stock is adjusted. It was up here, 50 if you remember. But then it adjusted. The price adjusted. It lowered by $4.75 because they're going to give it to you in cash on the dividend payable date. So we got 3 days to worry about. Announcement day, ex-dividend day, and then the day they pay you, which is called payable date, which is on 9/8. Today's the 1st. So in 7 days, what is that? What is that? What day is that? On the 8th, Look at that. Next Thursday, they're going to pay us the money. Boom. So you're going to get 10% of the down move back. Now, why did this move down? Well, the whole market moved down. I had a guy tell me, well, your pick was horrible. Okay, bro. Because let me help you with a lesson. Let me help you with a lesson. It don't matter what stocks you pick. If the S&P 500 goes down, they all go down. That's why we call it the wind. See how much education. You don't even need a finance degree. If you listen to me, you don't even need a finance degree. I just dropped so much stuff, I highly doubt brains could comprehend it. We talked about dividend announcement day. We talked about dividend ex-dividend day. We talked about dividend payment day. We talked about dividend in relation to percentage of price, right? We also talked about how does a company pay the dividend. So when a company's in trouble, it means they're paying the dividend, but their income doesn't match the payment. So these guys are going to pay 30% of revenue in a form of a dividend. So if the revenue goes up, the dividend goes up. If the revenue goes down, the dividend goes down. And it'll float. So as you own this stock, lower prices become an opportunity because when things are booming, if they commit to that, if they stay the course, now they could change their mind. I don't know. I'm riding along for the ride, man. I'm riding along for the ride. I'm riding along for it. I think it's exciting. BX did the same thing. BX's dividend floats based on earnings. That's how companies should do it. But we have a lot of people in the world, they got minnow minds. They think if you lower a dividend that it's a bad thing. No, it's not. It's called being responsible. If your income got lowered, would you go, let's keep spending the same? Well, a lot of Americans would, so it kind of makes sense, I guess. But in theory, if your income goes down, your outgo should go down. It's called being responsible. So when they cut a dividend, it's actually a good thing, guys. It's smart. It's smart. Now, people don't respond that way. And if you go back and look, they never do respond that way, by the way. If you go back and look at Ford, and we go to the weekly, back over here, when we had this catastrophic drop during COVID, Ford cut the dividend. And the stock plummeted, man. It was already having problems with COVID, but then it plummeted all the way down to $4. And people are like, why don't they stop paying the dividend? So they got out. They're like, oh, COVID, the dividend, there's no dividend. And that was smart, guys. That was smart. Because now they can use that money as a bat to protect the company. And then what happens? Look at these brilliant men that run Ford and women. It went from $4 to $25, but there were a line of people that sold it because it cut the dividend. Cutting the dividend is not a bad thing. It's usually being smart, okay? It's usually being smart, but you got to think a little bigger. You got to think out a little further down the thing, okay? You should cut your dividend. A lot of people criticize, the influencer Grant Cardone because he stopped paying when COVID hit. He stopped paying out to his investors. Well, of course he stopped paying. We have a problem right now, and people may not pay. So he needed to what? Keep all the money to rally around. That's called standing your ground, man. First thing you do, first rule is not to lose money, is not to go backwards. So when you're in trouble, you should stop spending. So it was actually a smart move on his part. Let's see. Yeah, very few people with finance degrees even know about dividends. It's sad. I'm sure the ones that self-educate do know. How does a share buyback affect a company's stock? That's a good question. Let's answer that real quick. That's a good question. He's like, how does it affect it? Well, let's talk about it real quick. And I'll give you the very simplified version. When they calculate valuations, it's in today, the way they do it, right or wrong, is they do it based on how much you earn per share. If you ever go read reportings, come over here. Let's see in Zim. Let's see if they you can go read on EBITDA on your own. Let's see. Okay. Let's see. Net income quarter was 134 billion compared to 888 million in the second quarter 21. Overall, it was a 50% increase, or $11.07 per diluted share. This simplifies it for us, the simpletons, the minnow minds. What you want to know is how much did they earn per share? Why? Because share is the volume. Dogecoin has 1 trillion coins, so they'll never be valuable. There's too many of them. Share count is what's important, right? How many shares are there? How much did you earn per share? And when they tell you that, you can easily compare it to last quarter, where they earned $7.38 per share. So they take this 1.3 billion and they divide it by the number of shares, and that'll tell you how much they made per share. That's a very simplified way of explaining it. So if we look this time, it was $11, and last time it was $7. Me and you, being simple as we are, can go look. They made $5 more per share. That looks pretty damn good. Well, how many shares are there? If there's only 2 shares, it means they made $10. If they tell you there's 100 million shares, you're like, whoa, $11 times 100 million? Well, that means a lot, right? Well, how many shares are there? How is it possible? Can you know how many shares there are, Gerald? Yes. If you click on it inside E-Trade or your thing and you go to just a little general snapshot, that's what it's called in E-Trade. And if you go to snapshot, here, we'll put it over here so you can see it. See it? Shares outstanding, 120 million. Wait a second. If you multiply 120 million times, where was it? $11, what do you get? $11.07. You're going to get $1.3 billion. See how all this flows? This is finance class, simplified. So once we understand that and we know there's volume, he's like, well, what does share buyback have to do with that? Well, what if the company steps in and says, we're going to buy 1 million shares? Okay, they buy 1 million shares. How many outstanding shares are there now? 119 million. 1 million of them got bought by the company. Well, guess what happens when they pay the dividend? They ain't got to pay it to those people. They bought the shares. Get it? The company could keep the dividend. Or what they usually do is they gives them, now they can raise the dividend because they retired shares. They retired 1 million shares. Well, if they paid a $4.75 dividend times 1 million, it's $4,750,000. Well, they could just add that to this. So now they could divide that by 19. They could step over here on the same income and increase the dividend yield by 10, 20 cents because they retired all those shares. Get it? That's one thing they could do. They could keep them themselves, I guess. They don't usually do that. But also now when they go to earnings, when they divide the earnings and there's only 119 million shares, guess what? It begins to increase how much they make per share as they retire shares. So as you retire shares, you take liquidity off the market. That's what they're doing. That's how share buybacks can affect the price. Because if a company buys all their damn shares, what happens then? Now they can't buy all their shares, but as they take shares off the market, there's less liquidity. And as there's less liquidity, it doesn't take as much. And that's how they can do financial engineering. IBM is the master of this. IBM just said, fuck it. If we're not making money, buy the shares back. And then every time they report, they earn more per share. Well, no shit, there's less shares. Yeah, but we made $1 more per share. Yeah, but your income was down. Yeah, but we made more per share. So our shareholders made more money for the shares they hold. Financial engineering, man. Wasn't surprised on users' recent stage 2 breakout, stopping at 200, learning from Uncle G. Yep. Look, you see where all these stocks stopped right at the 200 and the RSI hit extreme like we thought. So, but look at Ford, dude. It's not selling off, man. What does that tell you? It's not selling off, man. This bitch wants to run. So what is Ford worth? What's the abomination of Ford? Let's see. Come on, man. It's only a 37% discount. Now, let me show you something else. This will blow your mind. There's 120 million shares of Zim. That's not many, dude. This is a small stock. What about Ford? How many shares are out there? 4 billion. 4 billion. 4 billion. There's 120 million shares of Zim. There are 4 billion shares of Ford. 4 billion. How many times more shares of Ford in the world are there than Zim? A lot. Like, what is that, 40 times or something? Shit, it's more than that, right? Okay, so what about AT&T? No, let's look at Coca-Cola. That's an old bitch right there. Look at Coca-Cola. 4 billion. What about Uber? Gerald likes Uber. How many shares of Uber are there? 2 billion. So if they add more shares, share price comes down. The value of each share goes lower. So when the company issues shares, they've diluted the value of the stock. So if Uber wants to raise some money, if you want to be desperate, like these Bed Bath & Beyond, these other stupid meme stocks that are going broke, they'll issue shares, dilutes the current shares, makes it worth less, and they're dumping liquidity. Well, the company gets that money, and they're trying to do that as a way. So they're willing to screw over their shareholders to raise money. And the board will elect that. They're like, well, we're going to sell shares. Because what that means is they don't make enough money to get a loan. Nobody's going to loan them money because they're not making any money. So the way they make money is they go to the market and issue shares. Take that money and what? Go piss it away doing more business that isn't making any money. Sears did that all the way to the bottom. So you got to watch. Now, is that the same for every company? No, because some financial companies will issue shares to do what? To buy assets. Not to buy inventory to sell at their stupid Bed Bath & Beyond store that's grossly horrific. So look at this one. Anley Capital. There's 1.7 billion shares. Well, what does Anley Capital do? Look at the dividend. 13% means for each share, they pay $22. 22 cents. 22 cents times 1.7 billion. Do the math on that. They must make a lot of money. Right? So we can go look. And if you notice, this will be a different, this is a mortgage REIT. So that it gets different in here. Ex-dividend day, 6/29, payable on 7/29. So on this day, when it pays, the price will drop by 22 cents because the money came out. How much money came out of the company? 22 cents times 1.78 billion. Like $1 billion. That means they're paying $1 billion dividend. Means they better make some money, right? Well, what's the market cap? 11 billion. So what these guys do is they own mortgage REITs. Now notice something, 11 billion. That's what? About a tenth of how many shares there are, right? And what's the dividend yield? 13%. You notice the triangle here of these numbers. Meaning they're a mortgage REIT. So 90%, a mortgage REIT by law, if you go read, I talk about this and you don't have to die broke. A mortgage REIT, per the law that created a REIT, 90% of all profits have to be paid to shareholders in the form of a dividend. They don't get a choice. They have to. So currently, 90% of their earnings comes to 22 cents a share. So when they report earnings, we could go look it up. It'll show you how much they made per share. And I guarantee it's going to be like 30 something cents. And they got to pay, bills. And then they got to pay 30 something. So it ends up being 22 cents go directly to the shareholders. My goodness, man. How sexy. Tesla, they like to sell shares to stay in business. He said, look at Tesla. Tesla has 3.1 billion shares on the market. That's a lot. What about Zillow? 245 million. The reason some of these stocks can fly is there's just not that many shares out there. So it doesn't take much. What about Shopify? I'd be shocked if they have more than 500,000. Oh, they do. 1.3 billion. So as they add more and more shares, the value of the company comes down. The only way they can offset that is if their income goes up. Then you could offset it. So, back to what my man said is, what good does a share buyback do? Is it lowers this number, which increases how much you made per share. That's all it is. And it's also a way to increase the dividends, man. Good question, though. I think that could be the first intelligent question I've ever been asked on Instagram or social media in 5 years. Sir, I'm going to send you a sticker. No, I take that back. That is the second most intelligent question I've ever been asked. Um, let's see. Yes, artificial increase of the company's values. That's exactly what it is. He says, everything I'm learning from a Series 7. Man, you ain't learning shit in a Series 7. That's what you're learning. Jack crap. You ain't going to know jack bean. You're going to come out of there with a Series 7 not knowing a fucking thing. Best thing they're going to teach you on your Series 7 is how to sell on the... Whatever you do not talk to people about stocks. And you're going to be like, yeah, but I got a Series 7 license. I know, but we don't want to get sued. So whenever anybody calls you, this is what you tell them. Past performance is not indicative of future results, sir. I can't tell you that. We have no idea. Here's what you should do. You should put all your money into a well-diversified dividend portfolio or put all your money into an index fund. That's what they'll tell you. So you'll go spend all that time, get a Series fucking 7 license to teach people jack nothing. That's what happens. That's how that goes. Same with you guys with your realtor license. Oh, I'm going to go get my realtor license. Don't own shit. Don't own real estate. Don't run a portfolio of houses. Just learn a bunch of nonsense. That's my take on everybody with a license. Oh, I went to carpenter school. Okay, well, you could have went to YouTube and watched a video and then just went and did it. That's what you could have done. But that's not the way we do it in our world. We like to have tags. And so remember that whenever you're dealing with anybody with a license or certification, their first responsibility is to not be sued. So when they give you advice, they're never going to say to you, you know what you should do, sir? You should do the push. You should take all your money and buy real estate. And then when the real estate's paying you money, come back and see us. They don't do that. They're not going to tell you that. They can't tell you that. They don't know how to do that themselves. They don't know that. So what you end up with is a kid that knows a bunch of fucking financial terms. He don't own any stocks though. Maybe a few. Yeah, same with insurance. Now, I get it. You need all those things. And I'm not picking on those people. There's plenty of great people in those fields, okay? I am picking on you a little bit because most of you got all these licenses and don't own the shit you talk about. You know how many realtors I meet don't own real estate? Like 80% of them. Let's see. It's a sales job. Most people getting a Series 7 license, you're going to become a salesman. That's what you're going to learn. You'd be better off buying Grant Cardone's sales class and how to make money on the phone. That's what you'd do better at, learning how to sell shit on the phone. I don't know if this young lady's on here. Should I pick on her? I always feel bad picking on girls. I think it's because I'm such a chivalrous guy. Chivalrous? Let's see. There was one other that I picked up before I forget. I don't like picking on girls, but sometimes I can't help it. It's the way my mom raised me. Let's see. There was one other. What was it? Oh, Boar still in play. Still hanging in there. I don't like chivalrous. Chivalry? I can't think of the word. Chivalrous. It's chivalrous. I'm going to pick on her anyway. You might be on here, and I'm going to pick on you because you need this. And I won't give details, okay? If anybody tells me that, I never give details, but I will use it in teaching because that's why I do one-on-ones. People don't know this. I do one-on-ones, right? I charge $100, and I listen to people's problems, and I give you my 20 years I've run multiple businesses. I'm a multimillionaire. I own real estate. I trade stocks every day. Like, I know shit. This is all I do. Other people hang out with this is what I do, man. I've read hundreds and hundreds of books, courses, and I just read and study. It's every day. You see what I post. This is all I do. This is all I'm interested in. Other people have hobbies. This is my hobby. This is it. From the time I wake up, time I go to bed is this. My only break is watching panda videos, funny dog videos, and shit like Game of Thrones. And even then I'm like, how much money do you think they have? So this is all I do. So it's better advice than maybe like your dad could give you because your dad's not running a business. He's not marketing. He's not trying to grow an audience. He's not trying to invest in sex. So they're doing different things. So I just give them my advice. But a little cheat code, it gives me content. Because then I see what people are doing and talking about and what's on their mind, right? So it helps give me content. Now I don't use them, but I do use the generic example of the things people talk to me about because then they talk to you about private shit, right? And I know, oh, okay, that's on people's minds because I'm 52. I'm not 23, right? And things were different when I was 23. So I get to hear it. And they're going to grow a business. Now, they're doing the worst thing you could possibly do, in my opinion, which is take on partners. I think it's a terrible idea. The chances of a partnership succeeding is pretty slim. The chances of your business succeeding is very slim, by the way. Okay? So it's 3 ladies. Chances of that succeeding is slim to none. And I was like, whatever you do, please don't borrow money, because statistically you're not going to win. I'm a gambler. I'm a bettor. I invest based on statistics, and I like to play rigged games. Everything I do wins for certain because over time prices go higher. And I was like, the game you're playing when you start a business that's the fastest way to wealth creation, by the way, is to create a business. It's not to buy a stock. It's to invest in business. But it's also the riskiest, okay? And they want to know if I would put their business out there. Like, hey, we're trying to, bring awareness, okay? But your account's on private. Oh, no, not my account, my business account. First off, let me let you in on something on social media. Nobody gives a fuck about a business account. Nobody goes on social and goes, I think I'll follow the Kroger website, Instagram account. Let's go follow Campbell's. Nobody does that. And there may be a very few members, because my gym said, hey, you should follow, here's our Instagram. And I was like, why would I follow it? Well, we post pictures of the gym. I'm in the gym. But my pictures of your gym are cooler than yours. The content I made inside your gym is better than the content on your stupid Instagram. In other words, they don't know what they're doing, man. Just posting a picture. Oh, and then they're like, well, we'll just post specials. All right, so it's like a restaurant menu. Like, nobody's following that. That's not going to do anything, man. You know what I'm saying? Now, could you? Yeah, you could take Campbell's, and if you put someone funny and some good content, and they were doing some recipes, and you brought Martha Stewart on there with Snoop Dogg, and they did a live on Campbell's feed, and then you brought on you went live, and you brought on some celebrity cook, and but they're not going to do that, man. That's called content creation. That's how you build a following on social, right? Not just posting stupid pictures. So you got people that own restaurants. I got a buddy that owned a restaurant. I said, bro, ain't nobody following your restaurant. Oh, yeah, a few locals do. Okay, but what is that going to do? You need to go live in the kitchen. You need to show us how you make those enchiladas. They're good, man. Show me how you make them. Like, now I'm following your content. Now you're putting out content that makes sense, man. That's how you build it. So, boom. Could you share? No, I'm not sharing your stupid Instagram. There's no reason to, man. Nobody's going to follow it. They want to follow you. But when I go to your account's on private. So they can't follow you. So they don't know you. People don't follow inanimate objects. By the way, they follow people. People buy from people, not from inanimate objects. That's why it's hard to have a robo salesman. Hello, sir. This is press what? Like that. You can't sell shit like that. But nobody buys like that. They buy from human beings. So, lesson in marketing, man. So, now they have a product they want to sell, but they don't have any social following. So, okay. So they're doing it backwards. And that's like how 99% of the people do it. If you go look at the people that are successful on social, they build a social following and then they sell you products. Not create a product and then try to do social. Everybody does it backwards, man. I don't know why I'm even telling you guys this. No one on here gives a shit about that. So let's look. What was the other one that I was... Uroy is a penny stock we were in. If you ever want to get rich, I can show you how to do it on social. But you'd have to give a shit and actually want to apply yourself. The number of people working jobs making $50,000 and $60,000 that aren't trying to make money on social blows my mind. Let's talk key level. We don't need to talk key levels of RSI. We already know the key levels, 30 and 70, bro. It ain't that complicated. Hustle Nation. What's up, Robert? What's up, my man? So this is Uroy, big pullback, big bounce up. Why? Let's see how many shares Uroy has, just out of curiosity. Let's see, how many shares are there of Uroy? Notice this. Notice this. Man, some of you guys give up so much money, man. If you would learn to use social. I'm gonna do a live event at my house only to talk about growing social. People want to get rich. It's one of the fastest ways to make money in the world, man. Look at my friend Chris. You guys think he made that money selling watches? Come on, man. Look at Grant Cardone. You think he became a billionaire buying real estate? No. He took the money from social and bought real estate, man. Come on, man. Come on, man. Yeah, I'm in Huntsville, man. I'm not in Houston, man. I'll be in Houston tomorrow. Me and my man Carlo are going to see Megadeth in the Woodlands. Megadeth, 5 Finger Death Punch. If you go back and watch my video, my man Carlo is going to go with me. Let's pull this up. If you go to YouTube real quick, trying to make him an influencer. Let's see. Come on, Carlo. You need to be an influencer, bro. Looks all cool. Let's see. If you go to this video right here on my YouTube page, Double Your Money Fast, Carlo basically turned $225,000 into about $500,000. It took about 6 months. He's fixing to do it again on the other side of the property. He probably made $1 million. It'll take a couple years to get it, but he made an easy $1 million. And only 1.5 million people gave a shit to watch it. So, and even with that small an audience, that number's insignificant, man. Nobody knows who I am. Nobody knows who I am, man. And it still is very, 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 very powerful. So if you go watch this, you can see what. And I meet guys all the time. Oh, they're sitting on 200,000. Like I'm supposed to be proud of that. It's like, man, you need a mic or sound equipment. Do I? Do I need sound equipment? You can't hear me, man. Can you guys not hear me on YouTube or something? That's the second person. You know what you need, man? Let me come to your house and tell you what you need, bro. Well, you're telling me what I need. Let's talk about what you need, man. Since you're an expert at giving people advice. Go watch that video. Me and my man Carlo will be at the concert tomorrow. If you're in the Woodlands, holler at me. We can meet up. Grab a beer. So, Uroy, it's in the Woodlands. It's Megadeth, 5 Finger Death Punch. There are 96 million shares. Turn up the volume. We'll see. What's up?
Can I have the code?
I'm on the phone. I can't.
Oh, crap.
Let's see. You need some better speakers. We hear you just fine. Okay. Thank you. They can hear just fine. Appreciate that, Capital Pursuit. Let's go back. That guy's giving me life advice. Let's see. Hopefully you can. Anyway, Uroy, notice this. 96 million shares. Not many shares. Not many shares at all. Not many shares at all. So again, 96 million. Look how the stock is moving based on today. Down 8%. Why? There's just not that many shares. When there's not that many shares, it can move fast. Okay. When there's a lot of shares, it moves kind of slow. So if we look at AT&T, what, 4 or 5 billion, and it's down 0.37%. So that number there, and this, again, we're talking finance here. Let's see. Notice this right here, beta. A lot of information on a stock inside of your brokerage account. We talked about shares outstanding. The less shares, the more volatile the stock can be. But also, let's do some stock trading. Stop talking, Gerald. Shares outstanding, 96 billion. Look at the beta. The S&P 500's beta is 1. So if it's above 1, it's running hot. Means that means if the stock, whatever the market moves, it moves 1.6. And if you look at something like AT&T, if you look at the beta on AT&T, it's 0.6. Means it moves at like half what the stock market moves. Also notice there's 7 billion shares. This is why this stock moves so damn slow. 7 billion shares. Do we have a stock educator in my thing who's educating people on different ways? Let's see. So, yep. There we go. So I think my next meetup, I'm gonna talk about growing social and helping people with their business on growing social. Any of these stocks you're messing with, make sure you go look at the Qs, quarterly reports, and you don't have to be a genius to read them. Once you understand share count, and this stuff all begins to make more sense. They made 1.34 billion. If you divide that by the number of shares, it gives you, we saw they made $11. If you divide that by the number of shares, that comes out to $11 per share. And that means if next time they report, they only make $9 per share, stock's probably going to drop because they made less money per share. That's all that stuff means, okay? So, come on, GP, you can do better. So this is just basic. Don't get all bent out of shape trying to be an expert book reader or books. This is the kind of stuff that can be outsourced, but you should still know a little bit about it, okay? And that's what this kind of stocks here, not stocks here, this is what like Morningstar and them can help you do. That's what they're talking about in here, right? So as you read this stuff, it helps you break down revenue of 37.9 billion, beat on a consensus of 34.3 billion. So guess what? When they divide this by the number of shares, you're going to see that they made more per share than last year, right? Look, earnings per share, EPS. They had an earnings per share of 68 cents, right? And then on that, they did what? They had a dividend of 15 cents. Well, it's a lot less than this 68, right? And so you can calculate then how much of their earnings are going out in a dividend. If these get lopsided, you got a real problem. That means the dividend is not sustainable. It's not sustainable. Let's see. A lot of times we're talking about the RSI. One thing you're going to see, depending on how you have the RSI set, I use the standard 14-day cycle. And you'll notice extreme points, extreme high, extreme low, and then the move is over, right? The down move is over. And then it runs up. Didn't quite get extreme. One of the things about that is the market goes down much faster than it goes up. And so typically it's harder to get the market extreme art. It's easier to get an extreme down RSI than it is to get an extreme up RSI, because of the nature of how many shares are out there and trying to buy them and push it up. But also what it's measuring is the velocity of price over 14 days. Well, if you look right in here, from here, 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 look at all these days where it's basically the same price. It actually didn't move very far. It didn't do it very fast. So as price slows down, and you notice it's not really going any higher, that RSI will stop and starts going. So what it's measuring is, and you notice when it dropped here, it immediately went extreme. See, that big gap immediately went extreme. Well, because again, it's measuring the last 14 days. And when you have sudden price movement like that is what moves the RSI. And all it's saying is it's gone too far too fast. That's all it's saying. It's just gone too far too fast. And that's what we see happening here. It's gone too far too fast. We've had a pretty decent down move. From here to here is a pretty decent move. It's like almost 20%. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. So you've had almost a 20% drop in a stock in 14 days. That's going to trigger an RSI below 30. And typically that's where we look for the bottoms. Also, almost every time you hit that, if you were to put a line on it, you're going to see price had stopped there before. And we've seen it stop here before a bunch of times. So actually bought some AT&T today. Jumping the gun. I call it calling an audible. I feel like the bottom is probably in. We don't have any other evidence of that other than just me intuition watching it. I don't trade like that often, but I will call when I think bottoms are in. I think some of these stocks have bottomed. Intel, Verizon, AT&T. Doesn't mean they have. 3M was one we were talking about, and I was telling everybody kind of let it bottom. Let it bottom. It's probably bottom today. And we saw that this morning. What I'm usually waiting for to say something for sure has bottomed is this right here. The MACD histogram ticks up. This is price momentum when it ticks up. When it ticks down, that's telling you that's probably the top. It was pretty damn close there. And it's telling you this is probably the bottom. Now, we don't have, is that a stage one? I would call this a stage one. We got a pivot point. We got 1 candle, 2 candle, 3 candles. And if you've ever heard me talk about borrowing one, when you have a solid line of support, I don't talk about that a lot, but there you go. Stage one. So I think a lot of these stocks are bottoming. I typically only call audibles or start nibbling on ones that pay dividends, because even if we're wrong, it really doesn't matter. I don't really like to do growth stocks like this way. I'd really like to see them stop dropping, because they can go lower and lower. Growth stocks could go, tech and growth stocks could go lower than you can possibly freaking imagine. Same with penny stocks, all that kind of stuff. It says, watch Chris Johnson's video about predefined stock scans and MACD crossover. Yeah, I mean, the concept's fine. I don't like that approach to, me and Chris are friends, and Chris was an early student of mine. I don't like that approach for beginners, because you're buying stocks, you don't know what the hell they are. That's what I don't like. What I'd rather see you do is learn to trade stocks. Meaning, I'd rather see you follow 50 or 100 stocks. What I'd like to do, I'd like to put some pressure on you, sir. I'd like to purge you. I'd like to see how hard I can squeeze on you, see if you break. That's what I'd like to do. I'd like to put you under the pressure gun a little bit and stop using scans and other little things to outsource it and make it easier on yourself. Let's put a little pressure on you. Let's make you commit. Let's make you come in every day and look at charts. Let's make you look at 100, 150 chart. Let's act like you give a shit for a minute. Let's do that, man. Stop looking for the easy way out. I don't want to do the bench press for you. I want you to lift it. Don't ask another guy to lift it. You lift it, man. You ain't deserved a right to run a scan. Who are you to get to run scans? You don't need to run scans. You need to know who created the MACD. Do you know who made up the MACD without Googling it? Do you know who created this indicator and when? Do you know what this indicator is doing? You know the underlying math? You don't need scans. You got a lot of shit to learn yet, bro. So what you need to do is go through your house and find all the stocks that you're already using in life. Apple, Ford. There's so many shit. You got so much shit going on around you trying to run a scan. You don't need to run a scan. You need to learn how to trade. So scans are for people who put in work. You ain't put in enough work to run scans yet. So then you come over here and you start following stocks, man. So let's go to the spiders. Spiders, with the 11 sectors of the S&P 5. If you don't know what that is, you have no business running scans. There's 11 sectors to the S&P 500. And inside of those 11 sectors, there's like 20, there's a whole bunch of stocks, but there's like 10 or 12 that run the sector. So iShares US Insurance ETF. What are the top 5 stocks in that? You go, well, I don't know. You don't need a scan. You need to study stocks. So you come over here and you go look up and you see what stocks are inside of this ETF, man. And if you start following these, so you say, how do you do that? Click view all. So as I go through and as I'm looking at I don't do the crossover on the RSI anymore. The crossover is right here. So I don't need to run a scan. I can go through and I can watch all 11 sectors of the S&P 500. Look, there's the crossover right there. There was the cross to the downside. So if we watch this every day, we're going to see it, man. We're watching. So if me and you, if you hung out with me and we watched 100 to 200 stocks every day, dude, every day, every fucking day, day after day after day, you'll be a machine. I'll turn you into a machine, man. You won't even be able to go by a store without seeing ticker symbols. You'd be like, oh my God, that pays a 14% dividend. Did you know they got 4 million shares outstanding? Did you know last year the corp, like, man, you'll know so much stuff, you won't know what to do with yourself. So that's what I would do, man. I wouldn't worry about running scans. I'd worry about scanning. You be the scan. Run the scans yourself. Come through here and be looking. XLP. What's in the XLP? That's a consumer staples. What are those? You say, what are consumer staples, man? Let's see. I closed my window out, man. I was going to show you how to find them. Look at the market coming back. I knew it was coming back today. That's why I called an audible. It's almost like I know what I'm doing. So if we come over here to the XLP, I don't need to run a scan. When I look at the XLP, look at the stocks in it. 1, 2, 3. Pepsi, Coca-Cola, Procter & Gamble, Costco, Walmart. You ever heard of any of these? Philip Morris, MO Ultra, Colgate. So let's go look. Look at the stock of Procter & Gamble. So there's the XLP. It crossed over. It's come down. RSI is 39, right? Well, let's look at Procter & Gamble. Let's see, what is the RSI on Procter & Gamble? 36. It's the exact same chart. So once you learn the 11 sectors, you know about 70 stocks. Just flipping through them, man. Man. Come on, man. Let me make you a stud, bro. You got 60K in Zim. Why would you put 60K in Zim, man? Why would you do that, man? I hope that means because your average positions are 60K. You never, ever go big on one stock, man. You got to spread it out. So I can't answer your question. I don't know. I ain't got 60K. I got like 10K. That's about the average size of my stocks. I start positions with a couple grand, maybe a couple shares, and I drip them. I drip them over time. I never just roll up and put 60,000 fucking dollars into a stock. Now that you've said that, I gotta ask you. I hate picking on girls, man. That's how chivalrous I am. I don't like doing it. I'm assuming you read the 10K. I'm assuming you read the quarterlies. I mean, I don't know what to tell you if you should be sweating. I bought some today. Now, most of these guys would be sweating because they're a bunch of little minnows. You gave them money, they'd be nervous. Most people, if you gave them $1 million, would get nervous. They wouldn't even know what to do with it, man. They're so scared. They don't know what to do with money. I bought some today, so that's all I can tell you on Zim. But yeah, most people are scared with fucking. They're scared with any money they get. That's why they don't get no more money. They're scared with the little money they got. And God's like, well, damn, if he's scared with the little money, how the hell am I going to give him big money? If he's a lunatic with a little money, if he takes giant bets, doesn't diversify, and is all out of whack on a little bit, how am I going to give him a lot, man? He'll just kill himself. So sometimes God's looking out for you, man. He's like, hey, blow him out on the 20. Yeah, blow him out. We can't give him 200. If he's going to blow out on 20, how can we give him 200? My sister just made 100K, and I made her read. I broke. Let's see. But you shouldn't. You got to answer that question yourself. You should not get nervous because you have a bigger account. This is why you want to step into your account, man. Like you want to grow into it. And you know, that's the beautiful thing about dripping and adding and riding some cycles and dripping and adding and riding some down cycles and dripping and adding, and you build it up. It's not a one-time transaction. It's a lifetime transaction. And sometimes I get people say, well, you know, I put my money in, now the market's moved down, what should I do? And I'm like, well, you should be putting money in. Well, I already put it in. No, always putting money in, all the time. I've been dripping money in for 20 years. Just keep dripping. That's what you do. And yeah, you're going to make, but you're not going to trade your way from, 5 to 1 million. I mean, are there people who've done that? Sure. People playing the NBA, but that's not how most people are going to do it. Most people are going to grind it out, man. And so the way to get you don't buy one rental and then that turns into 20 rentals. You save money and buy one, then you save money and buy one, Then you save money and buy one, and then maybe you borrow against one to buy a fourth, and then you save money and buy the fifth, and then maybe you flip one and use that to buy two, but then you save money, and then you have a big stock when it runs up, you buy, like it's played like that, man. It's not one-time transactions. It's all the time transactions. It's all the time transactions. And as you need it, you can tap it. So let's say you run a trading account to 150 and you find some deal over here, you're going to start a business, you need to buy a car, you're moving for a job promotion, you need to get a house. Well, you go to that account, you bang it, you take some money out, you go do the transaction. Next day, you're back to putting money in your account again, and life continues. And that's how it plays, man. It's never a one-time thing, man. So let's see. Yeah, but don't chase, No, I like the company. If you go read, Zim's making a lot of money. I wouldn't have sent it out. All disclosure, I got about 10K in it. I bought some today. I bought some yesterday. I'm going to buy it. This dividend will fluctuate. If you go read it, you got to go read what they said. Now go read the earnings. They're going to pay 30% of their income. Well, what happens if income goes down? Well, they're going to pay 30% of a down income. So, that's how that works. Yeah, man. So anyway, take your time. You can't buy all your stocks every week. I focus on a new group of stocks. That's what I do on Sundays is I scan my charts. I don't run filters. Stop doing that. You don't need to do that. Once you've been in the game for a long time and you got a lot of money to throw around, you can scans. But dude, if you just stick, look at this. The XLV healthcare is breaking above the 5. Looks to put in a bottom. Means you could step in. I bet you find 40 stocks in there with good charts. Boom, boom, bada, bing. And when you do that, you're learning through repetition. You're learning all these names and tickers, and then you start having your go-to healthcare stocks, your go-to this stock, your go-to in the XLP, the go-to in the retail, your go-to in the financial sector. Pretty soon you got 50 or 60 go-to stocks. You don't even need to run a filter because they're all breaking out at some point. And you'll have so many, I got so many plays and picks that I own currently. I don't need to run a filter, man. Fuck, I got 30 stage ones in my own portfolio, man. So I follow over 100 of the same stocks every day to trade. So when I come up here, if I want to trade, if I'm looking up here, I come over here and I go to, let's go. Here's a watch list. These are some that I'm watching to get into some trades. You see what I see here? Doesn't that look like the money flow? Look at that. That's the money flow, right? Sideways up, sideways down, sideways. Look at this. So I'm watching it. Sideways up, sideways down, sideways. But I need that to get above the 5. This is not a dividend payer. So I'm watching this penny stock, right? Well, that's one. Cake is one I'm watching. Cheesecake Factory. I'm keeping an eye on that. What else is this? Geo. Ooh, that one's crushing, coming down. So these are some I've been kind of keeping an eye on to possibly find a position. I didn't run a filter to get these. I read Barron's. I read financial articles, okay? I subscribe, like a big grown-up, to financial news, not Reddit, actual subscriptions to financial things written by financial journalists. And have you ever thought about cutting your portfolio in half? No, Trevor. Does that stress you, sir? Gerald, there's 77 stocks. That's so stressful. It feels so, there's so many. How do you possibly manage 77? It's so stressful. Because some I don't do anything, guys. I haven't added to Pepsi in 5 years. I don't need to. It just goes up. So once I hit my 10, 12,000, I just leave it alone. I don't need the 12,000. I go get new money and put the new money into new stocks. And so when the stock crashes and I look at it and it's in the XLP, I'm like, well, I already got a bunch of Pepsi. So what can I buy this time? And I'm like, well, maybe I buy Coke this time, right? And then all of a sudden now I got Pepsi and I got Coke. And then maybe on the next crash, I pick up some Dr. Pepper. Now there's 3 stocks all in the same sector and life goes on and the years go on, right? And I don't need to look at Pepsi anymore. There's nothing to do. So I'm only ever watching 10, 15, 20 really close. Those are the ones I'm trying to build. When they get over 10 grand and running, I'm not even paying attention to them much anymore, other than to make sure the business is solid, right? But okay, like I own Exxon, Conoco, and Chevron. I didn't buy them all the same damn month. One oil crash, I bought Exxon. One oil crash years later, I bought Conoco. One oil crash years later, I bought Chevron. One oil crash later, I bought Fang, right? Fang. And so guess what happens? Next thing you know, fast forward 20 years, you got 70 something stocks. Now, if you're just starting with me, yeah, you're not going to run out and buy all the shit that I own. You'll be stressed out. Most of you guys would commit suicide, be like jumping off a fucking bridge. Oh my God, I'm down 30,000 today. I met a kid the other day. Said his life was over. He lost 14 grand. Life or death, he said. That it was over for him. He lost $14,000. And I'm like, bro, if you thought 14 grand was going to be what made your life, you're sorely mistaken. And if you think that's the only time you're going to lose 14 grand, you're sorely mistaken. I've lost 14 grand buying a house and the AC unit went out the next month and it cost 14 grand to fix it. I didn't commit suicide. I went to work. So, yeah, it sucks. Yeah, what you did was stupid. So, go to work and get more money? Like, that's the answer, not suicide. You get what I'm saying? Like, you get what I'm saying? No, he didn't sell, bro. He did some really dumb shit and got caught up in a bad deal and lost the money. So that's what happens. So you're gonna make mistakes. I've made mistakes. A lot of people make mistakes, man. No, I haven't thought about cutting my portfolio in half, bro. I'm very good at it. I'm very good at managing it. I like having lots of stocks. I like being diversified, man. It makes me feel good. It makes me feel warm and fuzzy. Well, can't be good companies, and let's be real. Let's see. I would just chill on Zim. It sounds like you got a lot. Now, maybe 60K to Cassie ain't no big deal. If 60K ain't no big deal, then don't worry about it. If that's an enormous sum, you got to ask yourself, why did you jump in so heavy, man? Be careful on that. Your sizing of your stock. The reason they do talk about diversification is so that you don't get blown out based on sizing. Let me give you an example. Let's say you had 70K in Ford at $9. Let's say you had 100K in Ford at $9. COVID hits and then they cut the dividend. You had it in there because it paid such a nice dividend, and it goes from $9 to $4, and your 100K is now 30K, and it's the end of the world. I've had this conversation with so many people. The only reason he's contemplating selling it is because of how much he has in it. Because somebody else is looking at this who doesn't have any in it, and they're like, oh my God, I can buy Ford for $4. That is definitely worth the shot. And the reason it's worth the shot to him because he ain't got none in it. But to the guy that had 100K in it, this is a big problem. Is it a big problem or is it an opportunity? Depends on how much you had in it. So you got to make sure that the amount you have in it, it can't blind your decisions going forward, man. So that's the reason most people teach diversification. Now, if you can control it, then some people can. There's people that have millions in there, So just keep that in mind. Make your position size where it won't control the position. Let's see. How do you feel about options to predefine scans while gaining terminology knowledge? Bro, I'm going to end on this. I'm going to try to help this guy out. Man, you look like a good dude, man. You got a weird hat on, but You got a weird hat on, man, but I ain't gonna hold that against you. Man, you should come trade with me, man. Let me help you before you blow your money on options. Come on, man. What are you doing, man? What are you doing? Let me talk to my man here, man. This is why I lay in bed and cry sometimes. Because of this. He's going to go do options. I can already feel the money he's losing right now. I can feel it. Probably the worst thing for him is he makes some money too. Then he goes big, blows it all. If you did the one-on-one counseling that I do with people who've lost $100,000, $200,000, $300,000 trading options, I would put that off, man. I would put that off. Matter of fact, you shouldn't try to make any money. Best thing for you, bro. Now, you're not going to do anything I'm saying because you're young and your brain's still growing. If you're less than 30, you're slightly disabled mentally. And your brains, you're not fully formed. It's unfortunate. It's just the way life is. And the worst way to come into trading is try to make money. The money will come. And if you do options, if I can't stop you, if you had debt, this conversation is stupid. So you should be paying your debt off and not trading at all, or trading very small. But what you should do is trade super small. The market ain't going anywhere. It's going to be here for the rest. You're going to die and the stock market's going to open the next day. It doesn't care about you or me. So you should trade very small. Like buy 5 shares of this, set a target, put a stop loss, and go get 10, 15 trades going every day. You got 10 or 15 small trades every day. 10, 15 trades every day. Stress yourself a little bit. You don't need to scan. Just get a list of 100 top stocks and do some trading. You don't need to do options. You don't do that. You need to trade shares. And while you're doing that, read on the stock market like an hour a day. Be 30 minutes in the morning, 30 at night. Read my book, You Don't Have to Die Broke. I got a bunch of other books you could read. And read and study. And don't try to make money. Try to execute on those 5 shares you bought. You set a stop, set a target, and your goal is to make like $10 a week. Now people will laugh at that. Most of you can't even make $10 a week. If you can consistently make $10 a week, you can add zeros. You can make it $10 million a week. Fuck it, just add zeros. The worst thing people do is they jump in, throw a bunch of money in an account, and start trading it. It is a terrible idea. Trade small. Spend the next year, 2 years practicing, studying, learning. Practicing, studying, learning. And what you're going to build is skills. Right? And while you're doing that, you're investing, which are not the same thing. Investing has nothing to do with trading at all. We're not trading our investments. We're not investing our trades. And separate these two in different accounts. And long before you get to options, you need to understand the difference in brokerage accounts, tax-sheltered accounts, regular accounts. There's so many things you need to know before you get to options. It saddens me because a lot of people, they're doing you a disservice. A lot of people being done a disservice, man. Let's see, man. But you should let me help you, bro. That's it. That's all I got, man. Just trying to help people trade. Trade small, man. Invest large, trade small until you got it down. Trading is difficult, man. It's one of the hardest endeavors you'll ever do. And it needs to be approached with such reverence and respect, the audacity that you even have the fucking right to come to a computer and sit down, that they even gave you stock charts. Oh, you guys are greedy. You don't know anything. You have zero right to even be here. It's only been recently they even gave you access to it. It's only been recently that anybody could even step up and play this game. It used to cost $100 to call in a trade. $100. Your parents didn't even do it. And now they've opened it up, and you can do it with the click of a mouse, and people take that for granted. Take it for granted. It's never been easier in the world to build wealth. This lazy-ass generation, which is just as lazy as the one before it and the one before it. Don't let the old people act like they got some work ethic. They're just as greedy and lazy. It's human nature. Fear and greed's what moves the markets. Fear and greed, not intelligence and logic. Fear and greed. The only reason you're here is you're greedy. I didn't say it's a bad thing. I'm greedy. But that's what moves the markets. Fear and greed. Fear and greed. It don't even matter. Dollar strength. Who gives a shit? What does that even matter? That's just mental masturbation, man. Stuff people talk about don't mean anything, man. What's a good place to start? Seems like you know a lot. Go look in the mirror and ask yourself why you got so many problems. Why are you so undisciplined? Why don't you have your goals written down? Why are you carrying debt? Why do you hang out with the people you hang out with? You need to start right there. Start right there, man. And that's the truth. Most people have not earned the right to be traders. That's how precious I take it. And their very presence being in the trading world is an insult to trading. It's an insult to the people that came before them that laid the foundation to even create it. And the opportunity they've been given, they just squander it doing the stupidest things. You could click of a mouse, you can access the public markets. You go back one generation, your grandfather couldn't do that. Ladies couldn't do that. And now the world is open to them. And when they get it, what do they do? Go do a bunch of dumb shit with it. So it's open to you, man. You can do whatever you want to do with it. But what most people will do is blow it off. They don't know anything about any of this. They don't know why the 200 days, the 200 day, why institutions find it important. They don't know what the TSI is, or that Mr. Blue created this, or Gerald Appel created the MACD in the 80s, and when he did it, where he worked. They don't know anything about the history of stochastics, who created it, or the history of charting itself, stock charts, and the difference between bars and candlesticks and why. And long before they know the history of it, they're blowing out. So make sure you earned a right to be here. And that is the truth. Richest man, one of the richest men in the world always says that. Warren Buffett's partner, Charlie Munger, says, and this is me to myself every day, do I even deserve to be here? Like, I have a hard time teaching on Instagram sometimes, because who am I? Who am I to stand in here and turn a camera on and talk with any kind of authority to anybody? What gives me the right? I'm nobody. You know, who am I? You got people teaching finance and money. They ain't got no money. They don't know shit about finance. They never even been in a recession. Never built a business. They never had employees, never had a baby, never had a child die, never been in a car wreck, never been sued. They never been any pressure put on them ever in life. Shit's been handed to them since birth. Teaching finance. Like life is simple as that. Like it's numbers. It's not numbers, man. It's not percentages and interest rates. That's not what life is. They make their equations. You know when you meet these people, because they'll go, well, you know, if you pay off a student loan, and this is interest rate, and if you invested, you would get, like, shut up. You don't even know what you're talking about. You have no idea what you're saying. You sound like a child. Because that's how life is. Life is not like that, man. Things hit you, man. And in the midst of your trading, your mom dies. Right? You can't afford a funeral. Like, things like that, man, are in the midst of this shit here. Your kid gets sick, needs braces. Now you can't trade. No, that shouldn't have stopped you from trading. You were a weak trader when you started, and now life pressed on you. So now you got to quit trading. Because they didn't come to trading the first way, the right way. None of that. Nothing ever in life that hits you should stop you from this if you set it up correctly. But if you come at this wrong, worrying about options and scans and all this other dumb shit, if you're doing all of that and you haven't set it up correctly, the right mindset, you don't understand it, you're not really a student of it. You think Michael Jordan knew about the history of basketball? I bet he knew more than you did. You think Tiger Woods studied the greats of basketball? of golf? Or you think he just slam a club and like, hey, what's the latest club? Give me that one. Let me buy that shit from an infomercial. You think that's what he did? Nobody great lives like that, man. You don't think Dr. Martin Luther King read sermons from the people before him? Got guys coming in here to trade. They don't even know who created these indicators. So deserve to be here. And as you deserve to be here, you're going to develop a love for it. And everyone who doesn't do what I just said will blow out. It's just a matter of time. They come and they go. People come and go. I get new students all the time. They stay 30 days. They go away. They come and they go, man. You need to deserve to be here. Me too. I'm talking to me too. I need to deserve to be here. And I try to reprove that every day when I come to the markets. I'm trying to point. It's not that those aren't good things, man. You know, I love Chris. I'm sure it helps him trade. Okay, that's not a dig on him or anybody. I make fun of options trader. A lot of my friends trade options. They know I'm kidding. All right, but we're on different missions. I'm trying to save the lost. Get them out of debt. Get some actual money in their checking account. Get them owning assets. I'm not trying to make you a trader. We'll get to the trading. But trading's not going to save you, man. It's earning the right to even be a trader. That's what's going to save you, man. Doing all the prerequisites. All this stuff is monkey simple. We can technical analysis and indicator that, but none of that's going to do you any good if secretly in your heart and in your conscience you know you don't deserve to be here. Man, God bless you. Anything I can do to help you, man, you let me know.